Hi, I'm Alma and I'm here today with Inga and Luke to talk about year-end planning for US taxpayers. So Luke, what's the number one thing to consider as we draw towards year-end?
So the number one consideration that needs to be given to US and UK individuals is making sure that they've paid enough UK tax within the calendar year to have a corresponding foreign tax credit on their US tax return to make sure there's no double taxation between the two jurisdictions.
Right, so does that apply to everyone? Who needs to think about this?
So typically you're looking at individuals who are paid gross, i.e. they haven't had tax withheld against their income. So you're looking at partners in partnerships, self-employed individuals. You're also looking at individuals who have large investment returns, i.e. interest and dividends, or have perhaps, realised some large capital gains in the year.
It's also applicable to people who are becoming deemed domiciled in 23-24 UK tax year. It's because from 5th of April 23 they will have to report their US income on UK tax return, when before most likely they claim remittance basis, for example. So that income will be taxed in UK, and they need to prepay UK tax payment to make sure it falls in the same calendar year when income arises. Also people, for example, who are deciding to switch from remittance basis to rising basis for any other reason. Again, the same applies. We need to check what income arose in 23 to make sure the tax credit matches it. Also people who are receiving US pension income. Quite often they have some US withholding and they think, okay, it's fine, it's been taxed at source, so I'm safe on this one. Actually, if they are US UK residents on a rising basis, they will be taxed on that pension in UK, as UK has primary taxing right. So they need to prepay that tax in UK, so they claim withholding as a refund back to them.
So if I have a UK tax payment due, even if US taxes were paid, I would still need to make sure that the UK tax was paid by 31st December to
Yes,
credit.
correct, just because so you make sure that you can claim back the withholding from US.
But considering the UK tax return is not due until 31st January, can't I just pay the following year?
No, because it has to reach HMRC and be clocked on HMRC's account in 2023. And the problem we're having with US and UK tax years is because January 24, we have tax due on income arising up to 5th of April 23. So whatever happens between April and December 2023, it's not shown on that tax return. So there's no tax in relation to that income. So we have to have current year income and then estimate how much tax will be due on that income. It means that you may need to prepay some UK taxes, which technically should be due only in January 25. So it's quite in advance payment, but it's very important so you don't get double taxed.
How do I make that payment?
To make a payment, you need to have so-called UTR, unique tax reference number in UK. If you filed previously UK tax returns, you most likely have that, so it's easy to arrange. We just send instructions, tell the clients make this payment. If you don't have UTR, if you never filed UK tax return, we need to make an application for it, which means that it takes about maybe 6 or 8 weeks to, if you're lucky, to get that UTR reference number. So it's very important that you start the process now.
So I suppose people who are just arriving into the UK, this is quite an important discussion to have because they might not have a UTR. Okay. And what if I don't make that payment by 31st December? What's the consequence there?
Well, you could be in a situation where you're double taxed. That may only be a temporary issue, because what you can do is carry back foreign tax credits 1 year. So it may be that if you don't make a payment this calendar year, you can make a larger payment next year and carry back some excess credits to 2023 and yield yourself a refund. But the issue with that is you're going to have a cash flow issue. You're going to need to pay the US tax now. You're then going to need to pay more UK tax next year. And then you're not going to get the US refund from the carryback claim until the year after. So it could be, a cash flow issue for a long time.
And I think at the same time it's also additional compliance fees. So we'll prepare the amended tax return, liaise with IRS if they have any questions or something goes wrong. It's all involves extra compliance fees.
So there might not necessarily be double tax if we can sort the issue out with a carryback claim, but it's best to avoid this kind of thing. Have a discussion now.
Yeah, you definitely want to avoid the cash flow issue, and it's worth noting that you can only carry back 1 year. So if you miss that year as well, you're then in a situation where you're permanently double taxed.
Oh, wow.
And I think it's very important to note that it only applies to people who are on paid basis in US. If you're on accrued basis, there's not much we can do. It's only for people who are on paid basis.
So an employee who has PAYE tax withholding that's probably going to be fine. Because
yes, probably if they don't have any additional income like rental or dividends or capital gains, if they only pay a WAE, so that should be fine because technically enough enough taxes, UK taxes should be withheld at source.
Right, so we're really looking at things without tax withholding and then making sure we have a discussion to make that payment by 31st December.
Yep.
So what other things are really important to consider as we make our way towards the year end?
So deductions may be important for US taxpayers. So US taxpayers have two ways in which they can claim deductions typically. So that would be the standard deduction, which for single filers is just under $14,000. For married filing joint couples, it's just under $28,000. The other alternative is itemized deductions, where you can claim deductions for things like your state and real estate taxes, any mortgage interest payments you've made throughout the year, and also any US qualifying and dual qualifying charitable donations that you've made throughout the year.
Can I just make any payment towards these deductions as I go along, or is there a limit on how much I can make each year?
So there's a limit on state and real estate taxes that you pay, so that's $10,000 for the year. For mortgage interest, there's other deductions depending on how much debt there is, and for charitable donations, it's limited to your 60% of your AGI.
Right, so I should really consider my income levels each year when I'm making my donations.
Absolutely, yeah. So it may be that it's better to hold off on making some of these payments until the next year, for example, if, let's say, for example, your 2024 calendar year is going to be a year in which your income is going to be much higher. It may be beneficial to make those donations within that year instead of 2023, or even potentially bring them forward to 2023 if your income is high enough for that calendar year.
Right, okay. So what about charitable donations? You just touched on that before. If I'm in the UK, can I take my UK donations to any UK charity against my US income? How does that work?
Typically not, but if you make your donations to a donor advised fund, for example, which will be dual qualifying, so be qualifying in the US and the UK, you'll be able to take a deduction in the US and also a deduction in the UK.
Right, okay. I guess those donor advised funds are quite helpful as well in terms of timing if you don't know what charity you want to donate.
Yeah, absolutely. So you can make the payment this calendar year and then potentially, look to make the donation to a charity in a future year, for example. Educational institutions can also be dual qualifying in the US and the UK, so it may be worth having a look into that if you're looking to make any donations to any educational systems.
Right. So are there any other types of payments, transfers, deductions that we want to consider throughout the year?
You actually want to think carefully if you're about to give some gifts to family or friends or whoever you want, because each US person has annual exemption of $17,000 in 2023. So as a couple, you, for example, can transfer up to $34,000 to one donee. Also, if you have an NRA spouse, you can gift up to $175,000. Again, you may want to use it to make gifts to your spouse. If you're considering higher, more substantial gifts, also it's time to do it now, because currently you have lifetime exemption of almost $13 million, which you can gift to someone without any estate taxes. The problem is being that you have it now, but after 2025, this limit going to be reduced. And what IRS promised is if people using that limit now are not going to be badly affected in the future when the limit goes down. So it's very... If you're considering doing that, maybe you just need to discuss that in more detail. Maybe it's the right time to do it in this year, in 2023. Also, taking into account UK aspects, if you make a gift, because UK wants estate limit is quite low, but you can do so-called PETs, potential exempt transfers. So if you're making a gift to another person, and if you survive 7 years, there is no IHT payable on that gift. Another very, very useful exemption UK has is gifts out of surplus income or gifts out of excess income. However, there are very strict rules HMRC asks you to follow. So what we do with our clients is discuss how it works, set up the rules, how much we can gift each year, and also very, very important to keep a record. Specific record is required of your income, expenses, and how much you're gifting to make HMRC wants to make sure that it's definitely out of excess income and not just made a capital gain and you gift it to someone. So there are quite a few things if you want to make a gift to think about.
So not only do I need to consider payments and donations to charities in terms of itemised deductions, I should really consider future tax planning for family, friends, children,
yes,
etc.
if you want to pass down the generation.
Right, that makes sense. Okay. So there's quite a lot to consider when it comes to year-end planning. Are there any other topics that we might want to think about at this time?
Yes, there are a few smart aspects people can take action on. So if, for example, US person has capital gain realized in 2023, they may look for an asset who is standing at a loss currently to realize that loss by the year end, so the gain is reduced by the loss. Some clients would say, I don't care because I will pay UK taxes on it anyway, so I have enough FTCs on my US tax return. But the real cost, what they're saving on capital gains, is not only capital gains tax, but also net investment income tax, which cannot be reduced by UK taxes paid. So it's a real cost, and if you're reducing your capital gain by a capital loss, you're reducing also net investment income tax. However, you have to be careful. You have to look at the timings, how you do it, when you do it. You have to look if it works both ways, US and UK. First thing, because of FX rates, it might be at a loss in US, but actually under UK terms, it's a gain, so it doesn't work, and you don't achieve what you're trying to achieve. Also, you have to review the asset you're selling or the gain you made on that asset, because if assets are not tax efficient from US or UK point of view, sometimes the loss cannot be used against it. So again, it's just the point is you have to double check and review those things.
Right, so I might have a loss in the UK or the US, but I need to also consider exchange rates in order to determine US and UK
yes, and
taxes.
type of asset as well, right, just to make sure the gains and losses are offsetting each other.
Right, so in terms of exchange rates, it sounds like it's quite a big thing if we're talking about two different jurisdictions. Is there anything else to consider with FX rates?
Yeah, so Inga touched on the disposal of assets, but the translation between GBP and USD can also have implications for US people that have debt which isn't denominated in USD. So, for example, that catches most people living in the UK that have a mortgage, for example. If you were to dispose or to refinance that mortgage, there could be an FX swing, which means that from a USD perspective, you have a gain. Now, whilst that may not have implications for year-end planning purposes, it could have implications for the income that you're receiving in the calendar year. It could push you up into a higher tax band, for example, which could have knock-on effects to what payments you need to be making to the UK for year-end planning purposes.
So other deductions that we can think about in terms of year-end planning, especially to offset these kind of things?
So you could always consider pensions, think about pensions, any contributions to US or UK pensions. They're always good to think about. Maybe not for year-end planning purposes, because you have quarter one to make some contributions for those pensions, but always good to be thinking about them and speaking to your tax advisor about any contributions you could be making and the effects that can have on your US and UK tax liabilities.
And following on pension contributions, also if you're a trustee of US trust, it's time to think now about if you want to make distribution to your beneficiaries. Sometimes it works to wash out some accumulated income or current year income, so beneficiaries get a better tax rate or better tax position. Again, as with pensions, you can still do that in quarter one of 2024 under a 65-day election, but important thing is it involves lots of thought, which beneficiary gets it, how much you give it, and the thought process should start now, especially we need to get information, we need to do calculations, determine the amount to distribute, so it involves a lot of moving parts.
So whilst we're talking about year-end planning, we might also want to be considering other topics that will affect next year's taxes as well, and maybe have a conversation at the same time then. Right, okay. So if we're talking about year-end planning and we're thinking about UK taxes that have been paid, does that mean I don't have a US tax liability because I've paid in the UK?
So, of course, it depends on case-by-case basis. If you have US-sourced income, possibly you're going to have a US tax liability. But again, it helps us if we have a view of your 2023 income from US and UK tax point of view, we can check if your estimated payments are accurate. Do we need to reduce them? Do we need to increase them? Just because previously, because of low interest rate, it was not such a big deal paid late or don't pay till April, because interest rate increased, it's quite a real cost if you don't pay it or pay late. If you don't have estimated payments, you should be well prepared to make a payment in April, again for the same reason. Don't delay till June, because interest rates are higher and it's going to be a real cost to you.
Right, so whereas I may not have considered estimated taxes before, it's actually quite important to discuss that now. Understood. So even if I have a UK tax liability, I might also have a US payment. And if I go through this year-end planning discussions with you and provide the relevant information,
you're going to get best result out of both.
So it sounds like there's quite a lot to consider when it comes to year-end planning, both on the UK and US side. I suppose the best way to move forward is to speak to your tax advisor and see how we can make those payments and plan for the future.
Definitely, it's the right time now.